What is good, everyone? So I am just editing this video and I'm going to put this bit that I'm currently recording in right here as an intro because it just needs a little preface. This video is going to help you so much in your trading if you stick with it and watch it to the end and understand how you can use all the steps in this video to apply them to your trading plan. This video is about collecting data and understanding all of the data that you collect and effectively using it to remove losses from your plan, take more winners, essentially, and then there's loads of finer details within that, such as just refining and other trade plan related bits. So yeah, I really recommend watching this to the end. It will definitely help you more than you know if you're kind of relatively new or if you're still pretty experienced trader, and I even throw some free resources in which you can download in the description. So yeah, enjoy it, and I will hand over the mic to past me, who's kind of weird, but yeah, you just have to go with him. So catch you soon, guys. Bye. Anyway, yeah, we'll get into it. So gathering data, like the way I do it is I will look at, okay, so these things that I've got written along the top of this table, these are all of the stuff that I will look at for winning and losing trades, and like having them in this table form means I can see the similarities between them, like so I can look to implement these similarities, obviously, as I was saying. So I'll share this table with you. It's quite like personally structured currently in terms of like it's got my range phase theories, which I've talked about in a previous video, and other stuff like that. But yeah, so when I'm looking at wins and losses, these are the current things that I primarily look at all along the top here. I'll go through them individually, and I'm just going to look at kind of the structure of how I gather data right at the start of the video, and then we'll look at some live chart examples just from like this week's EU price action at the time of recording, and yeah, I'll kind of like try and intertwine it there. So there are things to consider that like realistically your main things that you want to kind of find similarities between and stuff like that is going to be, so multi-timeframe structure. You can do this how you want. In my case, I've got range phase as part of my structure and then trend as part of my structure. So the way I've split that up is, if we have a look at this one, so this was a GU trade that I took, and I've got all my multi-timeframe screenshots here. So the range phase for this particular trade was daily continuation. I haven't actually got a daily screenshot for this because it's a little bit older, but we're continuing this bearish leg because we've changed order flow. So we're in the daily continuation phase. 4 hour same, 15-minute is pullback, because at the time of the trade we had, obviously this was our 15-minute leg down to here after breaking this low, and then we were currently pulling back as I entered the trade, which was the top of the pullback, obviously, clearly, like from this. So that was the phase that we're currently in. It's the way I have it is, it's not like the phase that you're trying to enter, it's the phase that the market is currently in. So like obviously I entered at the start of the continuation phase, but I had a few confluences to believe that it was the start of the continuation phase, but obviously, yeah, we just had this 1 minute change of character. So in terms of the 15-minute, we are in the pullback phase, but about to start the continuation, if that makes sense. Anyway, you don't need to do that, that's just my own range phase personal stuff, so yeah, you don't have to do that. In terms of trend, I will look at this in regards to the specific trade and how that correlates with where we are in terms of multi-time frame trend. So obviously this trade, it was a short, and it was like daily was short, 4 hours, daily was bearish, 4 hours bearish, and 15-minute was obviously bearish. So this trade was pro like every trend. Realistically, I just do daily, 4 hour and 15. So yeah, that's structure, which is obviously the most important thing. Following that, I've got supply and demand, which has been split into 2 categories: order flow and POI selection. But obviously I've written it in my own unique way. But yeah, so order flow, I will look at like which flow my trade is in the same direction of. So in this case, our daily order flow is bearish because we're breaking lows over here. Obviously our structure is bearish, but that's different from our order flow because we've got bullish order flow up in here until we take this low or this low for daily. I don't know which one it is, but yeah, I think it's this low. So our order flow is bearish. Same with the 4 hour, and obviously I've got this is 15-minute, which actually isn't technically true, to be fair, because we had so I need to change that, but we broke this high here on, I'll just show you a bit more clearly. We broke actually this high here because it made this little low, so we were actually bullish order flow, not structure, but yeah, we're bullish 15-minute order flow, so I'll add that in. For the data collection, so that's the first part of supply and demand, which I'll look at. Secondly, I'll look at the POI selection. So obviously you can see I've got different similarities here, like a daily POI, 4 hour, 15, refined, direct chain, indirect chain, extreme, and flip. Obviously there's different types, like stuff that grabs liquidity, but I've got that in a different section, just kind of how I prefer to do it. So in this case, I'll look at the liquidity afterwards, but we've got, it's effectively a extreme of this push here, and it is, I think, yeah, I've got the refined POI, which it tapped this 1 minute, which I've written, and then what else? Direct chain POI, because, right, so yeah, supply, we tap this, obviously do the same again, break this little low, supply chain, and then these wicks flip off this low here before we take it, so this interacts with this flip, and then obviously the same thing again as here, these wicks flip off this little low here, and then this comes up and mitigates it here. So it's a direct chain POI, slightly different to indirect chain POI, which is just another one of my own little personal things, which I'm not gonna talk about too much now because I haven't like correctly formulated it into something I can offer you guys as like a well-defined and clear concept, I suppose. Well, it's not a concept, it's just like a slight variation. But yeah, sorry, I'm going on kind of tangents, but I'm just doing it quite in depth so you guys kind of understand my outlook when it comes to gathering this kind of data. So yeah, so that's the POI selection done. Obviously then we move on to liquidity, which obviously in this case I've got a few different options. In this case, the 15-minute POI takes, I'll go on the screenshot again. Oh god. Yeah, so this POI takes this high here, which is a structural high, so takes major liquidity instead of minor, which would be just like a small high which didn't make a low or something like this, for example. And also the POI has inducement in form of this high here, which is clean. So that would be my kind of high time frame liquidity aspects that I'd want to look for. There's a couple more you can look for, but that's kind of generally that kind of generally covers it, I suppose. Then yeah, on the low time frame, I will look at liquidity as well, which clearly has a little bit more. I'll just run through these. So like, if the POI doesn't have inducement on the high time frame, obviously you want to see it get taken on the low time frame before you enter. So this is what this is. So the extreme takes major liquidity, that's being structural, or the extreme takes minor liquidity, as I just said, like just like equal highs, which don't really make a new low in this case, for example. Extreme has inducement. Yeah, that's just exactly what it sounds like. You got like a high made after your POI that you want to be swept into your entry. Sorry. And then obviously the same again, like major liquidity, minor, and inducement, but for the flip this time. And then this is another thing which is like something personal of mine. P stands for peripheral. So it's instead of like the I've got two main entries being inceptive entry and peripheral entry. Inceptive is like the first low time frame shift, so you're entering off the first like 1 minute change of character or the first 5 second change of character, whichever you trade once you tap into a POI. And then peripheral, which is all of these, is like based on the order flow away from a POI. So obviously this one isn't a peripheral entry because I literally get in like right on the first change of character. But like for example, if I were to enter, not that I would, but if I were to enter on this high, like coming off something in here, I guess that would be a peripheral entry because we've made all of this kind of little structure away. So you're entering on the order flow coming away from a POI rather than just the first trend change. So I don't know why I breathed in so hard then, but so yeah, obviously that's the exact same again. Like peripheral extreme would be, this is a pretty bad example for it because it would basically be like this high here because all of these are not really proper lows, the 1M. So you get to here, make a high, and then make a low. So this would be the extreme of this peripheral smaller leg. This is obviously, I'm explaining it rather. I haven't like formulated a very concise way to put this yet because it's all my own personal stuff. But yeah, obviously this is just the extreme of this leg here. It's not the extreme of the whole leg coming away from the POI, but it's the extreme here. And obviously your flip would be like this or something like that. That would be your peripheral flip. So yeah, so yeah, that's basically all the liquidity on the low time frame that I'll look at. Next up is pricing. These are kind of done like generally in order of importance. So yeah, like pricing, I'll just look at premium and discount on these 4 time frames primarily. Yeah, daily 4 hour, 15M, 1M. It's pretty self-explanatory. In this one, obviously, we are just about in the premium of this like big leg for selling, and obviously we're in the premium of this 15M leg and premium of 1M because yeah, it's like right at the top. After that, I'll look at momentum. and kind of try and see where it enters the market on the low time frames. So obviously you want to get in on like a momentous move, right? So generally I've found that the momentum occurs usually either post break of structure or post liquidity grab. But obviously you've got it can occur from the extreme or be generally like aggressive and volatile, or yeah, nothing. So for this one, obviously it's post break of structure and post liquidity grabs. So if we look at that here, it's not a proper break of structure, but we sweep all of the high time frame liquidity on the left, and we sweep these, and then it will actually, to be fair, I think you can say, I mean, this is like, this move down here is, where is it? Like, it's somewhat aggressive, but it's not compared to this. I think like these pushes here and here are much more aggressive than kind of even this stuff from the top, which is obviously once we break structure on the 1M and we sweep all of these stacked highs here with these candles, and then we drop, so with like much more aggression than this stuff coming down here. So yeah, I'll just kind of add that in to look for similarities and where to get involved. Yeah, as I said, usually post, like after grabbing liquidity or breaking structure. My entry model is, this is something that I will need to update soon, because I'm formulating my entry models into a bit better of a kind of overall package. But yeah, this is an Inceptive, and here's another one of my personal quirky names. Chalk just being change of character, chalk, however you want to say it. I just find it funny, so I've called it chalk. And then yeah, the number of decisionals used, well, this is, if you're only mapping individual trades, this will just like either be 0 or 1. But if you have like, if you're doing markups, you might have multiple trades in a day, which, so you can map like how many decisionals worked and how many extremes worked. Obviously it's just gonna be 0 or 1 in this case. Then I'll map the decisional failure, which obviously I put NA, so not applicable for this one, because we basically just change character, and then like there's not really a decisional here. It just comes straight back up to the extreme of this first 1M shift, and then we start dropping lower, so it's not applicable in this scenario. And then finally, key takeaway from a trade for this one, literally just following the aligned timeframes, and that is a key takeaway for like almost every trade, to be fair. I think that's kind of one of the most important things. So yeah, those are the, how many things is that? So multi-timeframe structure, how it's interacting, that's one. Pro trend or counter, multi-timeframe order flow, POI selection and confluences, high time frame liquidity, low time frame liquidity, pricing, momentum, entry models, extreme or decisional, and key takeaways. So it's kind of like 11 things, I guess 11 key things. Yeah, so I guess, I mean, I did kind of go over the chart side of this data gathering stuff as well, just in these excerpts from this mapping, this trade, sorry. But we'll have a look at some stuff on EU quickly. So you're mapping, this is just some trades from this week which were clean and high probability. So yeah, let's say for this trade I'm mapping the, I got a little cheeky little loss up here. So obviously I think I said before, but I would apply both of these, I'd apply all of this data gathering to both wins and losses, and yeah, and then keep them in like separate separate areas in your Notion or whatever, for ease of analysis, etc. So yeah, in terms of structure, obviously these shorts are pro daily trend, counter 4 hour because we're bullish, but pro 15M because we're bearish on the 15M. So that's how I'd map this, that's how I'd like address the structure mapping side of it. And then obviously you've got your how, if it's pro trend or counter trend. I know I literally just went over that, sorry. Sorry, I'm looking at some little notes on my other screen. But yeah, after that, multi-timeframe order flow, how that's interacting. So for daily, this short would be counter daily order flow, because we get this daily change of character here. So we're bullish order flow on the daily, and then yeah, we're basically our order flow is bullish from yeah, we take this high again here, and then we come lower and then take the high. So this 4 hour leg here is our daily bullish order flow, our most recent order flow, until we get a change of character on the daily, which would be, well, taking this low out here, then we're still in daily bullish order flow. 4 hour order flow, this is bearish 4 hour order flow, because you come up, take the high, take the low, and then that's our current leg of order flow. And 15M is a little bit more complex, but not crazy. So as you can see, I've written here, this is like our 15-minute order flow would be all of this internal stuff, like this low, this high, this low, this, it looks super messy, but yeah, we've got this well-defined low, this well-defined high, and then one consecutive push of bearish candles. So this is bearish 15M order flow, but internal order flow here is obviously bullish until we break this low here, which I've marked. And then the second trade is, I mean, you've still got bearish order flow with you for this first one, but this second one is like double aligned on the 15M, I suppose. So yeah, that's order flow, multi-timeframe order flow for these for this short. Next up, you'd be looking at POI selection and confluences, which, let me just have a little look at the yeah, so yeah, this is, so it's 15 MPOI, it's not a 4 hour or anything. I don't think it's visible on the 4 hour at least. You could kind of say it's part of these buy to sell wicks, but it's not super, like it's technically below the wicks, right? So yeah, it is an interaction to this wiki kind of not very nice demand over here. So we interact, break it. Our extreme would be up here. And in terms of like a supply chain, it's not very clean, but it's technically just a supply chain coming all the way down here. Like, obviously, you could easily see price travel back up to like somewhere up here, and then continue lower. But this is kind of like all intact supply as we continue down. So yeah, this is part of the supply chain. It takes like minor liquidity because we basically just take this candle's high. There's nothing structural, and obviously we have no inducement. So you want to see some taken before entry. In this case, it's not very nice. It's not very ideal. That's why waiting to get in for this trade is even better. But yeah, we take obviously these equal highs before dropping. Next up would be low time frame liquidity, which obviously well, I kind of just covered high time frame liquidity just in that brief look at the 15-minute POI. Low time frame liquidity, yeah, obviously the extreme takes equals, and then you've got, I guess this would be the decisional, which doesn't have any inducement, and it's pretty. You can barely even consider that inducement, to be honest, for the extreme, because it's not an actual high. But yeah, so it's pretty minimal on the low time frame liquidity front, until we get this stuff happening here where we build these equals to be swept, sweeps it into this. Obviously this is based on a reaction. So again, this where, actually I'll talk about momentum afterwards. Yeah, so this is where you could map your, this would be like, I'll just get back to, yeah, so obviously this leg that you're entering on is a peripheral extreme, because this is the full-on extreme of this whole down move, but this is the extreme of this internal leg. So it's a peripheral extreme which has structural inducement. So yeah, that is your low time frame liquidity for this one, for this entry, which should be there or something. Next up, pricing. So what's going on here? Okay. Pricing is I'll do it from the daily. So this is our daily swing EQ. It's not quite in the premium on daily, I don't think. Let's see. No, it's a little bit under. So yeah, that's discount on the daily. It is premium on the 4 hour. This is our EQ, so we're well priced on the 4 hour. On the 15M, it is not. It's discount. So yeah, and then on the 1M, it's usually going to be premium or discount, to be honest. Obviously in this case it's very premium, like right at the top of this leg. I'll just draw it on for you. Well, we got this leg, and then this new one, and obviously this leg takes it up to here, so we're right at the top. like as premium as you can get. After that, you're looking at momentum, which is what I briefly kind of started on before. So we've got a pretty good bit of momentum from the extreme. And again here, this is pretty nice momentum, but then it's kinda like this is like a lot more momentum than this, which happens after we sweep these highs, so after a liquidity grab and after we've broken structure multiple times away. So that's how I'd map that. That's how I'd collate this data for momentum. After that, just on entry models. So this trade is an inceptive for me. Like I said, these are all my personal things. Just these like entry models and well, range phase primarily. So you don't have to use any of this, but I'm just demonstrating it for this trade. So this one would be an inceptive. This one is technically peripheral because we've come up to mitigate the first change of character, and then we've made another change of character away from the zone. So we've changed away again. So yeah, we are entering on the peripheral here, extreme pretty much, although it's not covering the high, but yeah. And then again, this is the peripheral extreme as well, of this leg. So after that, it's just extreme or decisional, which I kind of just covered in the entry models. But there's one extreme. We'll call that a decisional because it's not covering the high, which is extreme. And then obviously another decisional of like, it's a decisional of this leg, but it is the peripheral extreme. Or yeah. Yeah, don't like, it's kind of not, I'm not really explaining it incredibly well, or it might be a little bit confusing to some people, so just don't use it if you don't really fancy it. Yeah, I just kind of wanted to kind of compartmentalize it all so that I had better ways of gathering the data for these wins and losses, etc., and like easier way to define specific criteria and stuff to do with the trade. So yeah, and then yeah, finally you're just looking at the key takeaways for this trade. So I would just probably say I'd probably have something about this POI being the final, like this is the last area to retain the 15M bearish order flow, and then I'd probably talk about once this low goes, the second short is even higher probability because we've got internal order flow realigned, and what else would I say? Probably mainly it. I'd have to sit for a little bit to come up with any more better things, which I'm not gonna bore you with the sound of me thinking, but yeah, that is basically it for the data collection. As I said, I will share this table template with you so you can use it and like add stuff and take away stuff according to how you want to map your data. But yeah, that is kind of everything I wanted to cover in this video. I don't know how long this has been. Oh, okay, it's been like 40 minutes. that's pretty solid actually. Well, I guess I've covered quite a lot, so yeah, I hope you guys got some value from this. It's kind of, as I said at the start, it's a bit of a non-tangible topic in a way to cover, but yeah, I think I did a pretty good job of covering everything that I want to look for. So yeah, I will see you guys in the Discord and get ready for another video for you all. So yeah, I hope you guys have a great week, a great afternoon, morning, evening, whichever time zone you're in right now, and yeah, big up guys, see you later.